Hello. The budget presented in India on Feb 1, 2020 has generated a lot of buzz, especially for the HR and the compensation and benefit community. The budget presented has a new tax regime that has been introduced. This has been done by reducing income tax rates and reworking the income tax slabs. In this video, we will try and understand what it exactly means. The current tax structure has the following slabs: 0 to 2.5 lakhs, nil; 2.5 to 5 lakhs, 5%; 5 to 10 lakhs, 20%; and 10 lakh and above at 30%. This tax structure also allows an individual to avail various tax exemptions under IT sections to reduce the net tax liability. As proposed in the new tax regime, the structure till 5 lakh remains the same. The income between 5 to 7.5 lakhs will be taxed at 10%, down from current 20%. Income between 7.5 lakh and 10 lakh will be taxed at 15%, down from current 20%. The income between 10 lakh and 12.5 lakh will be taxed at 20%, down from current 30%. And incomes above 15 lakh will continue to be taxed at 30%. The effective tax rate for individuals with taxable income up to 5 lakh would be nil under both the new and the existing tax regimes, as these individuals would be able to avail tax benefit of rebate up to 12,500 for both the regimes. Section 87A does not apply to individuals with net taxable income above 5 lakh, which means they will have to pay rupees 12,500 if they cross the net taxable income of 5 lakhs. What also is important to know that a person opting for the new tax regime will have to forego various tax deductions and exemptions which otherwise can be claimed under the old regime. Deductions and exemptions such as standard deduction, HRA, tax saving investments under IT section 80C like fixed deposits, PF, NSC, ULIP, LIC, tuition fee, medical insurance under ATD, education loan under ATE, etc. cannot be availed under the new regime. However, home loan interest deduction for rupees 1.5 lakh has been extended by 1 year for the first time home buyers under this budget. Let's also understand how it works for the senior and super senior citizens. For senior citizens aged 60 years or above but less than 80 years, income up to 3 lakhs is exempt from tax. Income from 3 lakhs to 5 lakhs is taxed at 5%, from 5 lakh to 10 lakh at 20%, and above 10 lakh at 30%. For super senior citizens who are aged 80 years and above, income up to 5 lakh is exempt from tax. Income from 5 lakh to 10 lakh is taxed at 20%, and income above 10 lakh is taxed at 30%. As per current income tax laws, the basic income exempt for tax for senior and super senior citizen is 3 lakh and 5 lakh respectively. As this itself gives them some tax relief in the existing structure, such relief of higher basic income or exemption limits is not provided in the new regime, which treats all individuals equally. Seniors should calculate whether they would pay less tax in the existing or the new regime, keeping this element in mind. Health and education cess at the rate of 4% is levied on the income tax plus surcharge, wherever it is applicable. Surcharge payable on income tax applicable on rich and super rich will also be added as per the income slab applicable to the individual. Surcharges will be added to the total income tax payable by individual as follows: 10% for income between 50 lakh and 1 crore, 15% for income between 1 crore and 2 crore, 25% for income between 2 crore and 5 crore, and 37% for income exceeding 5 crore. In nutshell, the budget 2020 has given taxpayer the option to choose between the existing income tax regime, which allows availing existing income tax exemptions and deductions, and a new tax regime which slashed income tax rates and new income tax slabs but no exemptions and deductions. Which tax regime, old or new, would be beneficial and result in lower tax payable for each individual is likely to depend on his or her income composition and investments done. Each individual will have to do his or her own income calculation to figure out which tax regime is more beneficial for him or her. In the next video, I'll be taking some examples to explain on how individuals with different earnings and investment will go about paying income tax in the old and the new regimes. The comparison will make it easier for you to understand and choose from the two tax structures. Thank you very much.